The latest fearful narrative that is spreading across the financial markets is the bubble bursting. Is the bubble bursting for the SP 500? Is it bursting in the tech sector, the 7 largest companies that have taken these markets higher in 2023? And of course, is Bitcoin also starting to burst? We've got a lot to get through in today's video. This is your home of macro cycle analysis, so hit that like and subscribe button. Well on our way to nearly 300,000 subscribers. So thanks very much for all of your support throughout the bear markets, especially hitting that like as soon as you get onto the videos. Now, if you want further information and education, there is over 1,000 videos on the channel now. We've gone back to look at every single top and bottom as well, and you guys have seen this. So make sure you do subscribe and check out those videos. I'll leave a link to them at the end of this video. Now, if you want more information about trading crypto and investing longer term or short term, check out the Investor Accelerator Premium. These are the profits that many of our members have made in the last 2 days. 30%, 20%, 50, 80%, 123, 45, 157. You can see here that they are crushing it. Now, this is part of the Investor Accelerator Premium courses. There is a lot to get through here. You can see many of these masterclasses and GAN courses, Elliott Wave courses, Wyckoff courses, everything to help you get started on your path to trading professionally and potentially full-time if that's what you want to get through. Link is in the top of the video description. Let's crack on with the video today. From the previous video, we've been looking at the August-September period as being a bit of a slop and chop type scenario. What does that mean? Well, basically, the price ranges are potentially remaining in a trading range throughout the period of August and September. This is historical data of 94, 95-ish years that show this particular pattern playing out time and time again. The important thing to note here is not the prices themselves, but mostly the pattern. Now, we might get some little rises up after we've seen these moves to the downside, like we're seeing now for the S&P. You can see we've had some tests, a little rise, and then another test. Maybe we'll have a little rise, but maybe we come back down and test these regions along the way to further consolidation before more upside. But of course, we're talking about bubbles bursting at this point, and it's a really good state for the market to be in if we can get these bubbles to burst, and they have started bursting. I'll show you that data in a moment as well. So just want to remind us where we currently sit in the market. This is probably the stage that we're in through August and September, which is also going to spill over into Bitcoin as well as we wait for the market to digest the mega moves it has had in 2023. Remember what we've done here on the channel. We've looked at these lows coming in for June, for October, and for that higher low in March, when the majority of the market has been extremely fearful. They're also fearful through this section here, hoping for further downside. But we really looked at this as a time for probably the last consolidation before we would move higher because of the higher lows. So basically some pure TA here mixed in with the market sentiment, how fearful that market is. And that is going to be the premise of what we're looking at today. When it comes to the market sentiment, we're finally getting the cool off and we're finally getting that bubble bursting on the market sentiment. But your edge, why you're here, is because you understand, or at least you're learning to understand, market structure technically when we look at the chart, and then knowing how to marry that together with the market sentiment. So we have the technicals, we have economic data that we can understand better, I would say, than 90% of people, because 90% analysts, Wall Street, whatever, social media, they typically lose money. That's a fact. And as we continue to follow through when it comes to understanding charts and the market sentiment, it's starting to put us on the right side of the market more often than not. We're not always 100% right, but more often than not, and that's what matters. What matters is we can understand that and we can manage our finances in the market, manage our positions. So that's where we are. What we're looking at next is the earnings season. So this is typically what many investors ride their investments on. Basically, they think that when there is a negative quarter or that earnings are declining, that the stock prices should also decline. So what we've seen is three consecutive quarters of declines. But what has happened in the market? Well, for 2023, Here's your 2022. That's close to 2023 as well. So 2022 and 2023, we've been up and up and up. So prices have gone up. So just because stocks have negative earnings, their earnings are declining, it doesn't mean the stock price has to go down. This is just not one scenario. This happens time and time again, but for some reason, the majority of them forget that price is what we trade. We don't trade earnings. This is absolutely ridiculous, and it's a surefire way to lose money like the 90%. It happens time and time again. You don't want to believe me, that's okay. Just go and do the research. As we always say, do the research. And that's what I do here on the channel, doing the research, sharing it with you guys as well, so you can see through the noise and pretty much how the majority of people typically get it wrong. Again, not trying to toot my own horn here, just want to stay pure with the data and remind ourselves of the history and what we have presented here on the channel, which you can obviously go back and watch any of these videos to see what we have talked about at the lows in the market. Okay, so earnings among S&P 500 companies have declined for 3 consecutive quarters. Earnings declines rarely last beyond 4 consecutive quarters. So we typically don't see 4 consecutive quarters. And what I alluded to potentially in the title is that we're seeing buying as the market's going down. This is typical of a bull market. That's what we want to see as well. So that's what we've seen here. When prices held up prices holding up despite declining earnings, forward returns were above average. So we typically see the forward returns being above average. This is some pretty crazy data. So this is what we're looking at here. S&P, after 3 consecutive year-on-year quarterly earnings declines. If that's all a bit of too much to digest, don't worry. The main thing is earnings going down year-on-year 3 times in a row. What do we see? This is the interesting part. If you're a bear, look away now, because this is very painful. This is very, very, very painful for bears, because 8 out of 10 times, remember we're macro here, we're looking longer picture, 1 year, 2 year, 3 years. We're not looking at the short term, even though the short term is still positive as well. 1 year later, after this signal, which we have got, remember, earnings are going down. What happens 1 year later? 8 out of 10 times, 8 out of 10 times, the price is higher. There's a positive return 8 out of 10 times from here. What's the average max gain? 16%. So we've been looking at this stuff for over 12 months. Not only this particular piece of data, but many pieces of data where we've looked forward. What happens 6 months from now? What happens 12 months from now? Going back to June, going back to March of 2023, and has shown that the market has been up, and the market actually did go up. So it just adds to the data that the market should be up. What happens 2 years later from this? Remember, it's not 100% guaranteed. 8 out of 10, maybe it is one of those 2 out of 10 times. I don't think this year is going to be one of those 2 out of 10 times. There will be one in the future, but it's not lining up for now, especially in a pre-election year. Talked about that before as well. What happens 2 years later? So what happens August of 2025? 8 out of 10 times, positive return. Market will be 20% higher from now. What happens 3 years later? 9 out of 10 times. 9 out of 10 times, the market is higher again. August of 2026, okay, because we're in 2023. Let's add 3 years. 30%. 30% higher than where it currently is. Potentially we're going to see higher than 30%, but let's just look at what the data has shown us since 1928. Okay, if you want to go against it as a bear, if you want to go against 95 years of data, be my guest. I'll love to hear from you guys in the comment section as to why, because we can always be wrong. 1 out of those 10 times will be wrong, and maybe that bear's right. But remember, there's a weird feeling amongst humans in general, no matter, it's not just finances, but everywhere else. Everyone looks for the most fearful thing. They look for the thing that can go wrong. You know, it's programmed into us for millions of years, etc. It's not different. In the financial markets, it's not different. So they look for everything to go wrong. But 8 or 9 out of 10 times, things typically go right or in a positive direction in terms of price if you are long, okay? So that's a pretty interesting one there, looking at these bubbles bursting in terms of earnings, in terms of market sentiment, which we'll get to as well. Remember, this is our macro cycle that we're looking at in terms of a top in the land prices. People often refer to it as real estate or housing. Yes, but it's primarily land because that's where the value is, not in the physical thing on top of the land, because that depreciates in value. But anyway, typically we're looking towards 2025, 2026 for a top in the land price. Stock market, however, may go a little bit further, maybe into 2027. Okay, so that's why we have pretty good numbers here for prices to continue going up. All right, the bubble bursting here in fear and greed. Okay, fear and greed, here is our reading. When it's over 85, meaning that there was a lot of greed, and then it cycles down to 65, you can see here in the yellow circle, greater or equal to a 3-week period, typically we've seen positive results 6 months later, 3 months later, 1 month later, 12 months later. Now, I don't really like to use things in the 60% because it's just not a high enough figure. But if we start to get to 77, which is basically 3 out of 4 times, if you wanted to lean it towards the 80%, then 4 out of 5 times, it's pretty high rate of it actually happening. 12 months later, we'll get positive results, average max gain being 17.5%. Again, you don't really want to go against this sort of data. You can, but the odds are against us. Why would we want to do that? I don't get it. I don't know why people are still so bearish about the markets. Probably because they don't check charts or understand the data the way it is it's written here. So this is the fear and greed for the S&P 500, and like we just saw in that previous chart where we've cycled down, this is a healthy correction for the market. So we're bursting the bubble of the market sentiment of how greedy the market has been on the way up, but they've been on the right side of the market. So I'm not holding anything against the old greed here, because we are on the right side of the market in a macro sense, higher lows, higher highs, breakouts, huge moves to the upside after the breakout. You can't deny that because it is a fact in the chart now, after we were talking about it on the channel for months and months and months. Now we're seeing a cycle back down in that sentiment. Really, really healthy for markets, especially in the early stages of the bull market. Let's take a quick look back to a previous bull market, 2000, into the peak of January 2022. You can see us getting into these high areas here, above 80, 85, cycling back down through September of 2020. So exactly 3 years ago, the market is up 3 years later. Let's see if it goes up again 3 years later from that point. Cycling back down, getting to around the green line here, which is, I believe, about 25 or 30. There it is. There's your pessimism, 30, and then starting to come back up, testing it again, and then back up. There you go, up, testing the fear, and then starting to get really greedy again. Eventually, the greed starts to wear off as you start to round the top, and you get some last ditch attempts and then back into that fear as the market rolls over. This happens time and time again. I could spend an hour on this, going through it and having a look at how the market reacts with our fear and greed. We want that fear, or we want the greed to reset so that the market can build off another base at a higher price, as we've covered when we marry the technicals together with the market sentiment, so that we can continue to build on this macro bull market. Now, where do we currently sit in the S&P price? How much further do we have to go? Just before I get to that, quick reminder, link in the top of the video description if you want to join us in TIA Premium. Plenty of members there making huge profits, as I've shown you here as well. Get on board with that. If you want to check out the reviews, link is at the bottom of the video description to have a look at the TIA reviews down there so that you can get a feel for what it is that people are saying and reporting on when it comes to TIA. So let's take a look at the S&P 500. We are currently down 3.2%, still in the single digits. That's what we've been talking about time in and time out, or time again, that the market is probably only going to do single digit declines in this pullback. The bubble is bursting, the market sentiment, that is natural, that's what we're expecting. And to our 50% level here on the weekly, it's about 6%, 6.1, 6.2%. There it is. So that's the low that I'm anchored to using our TIA Gann swing indicator. That is linked in the video description as well, but you'll need to learn how to use that. Links are over here, Gann swing accelerator. Okay, this is at 6%. We still have 3% move to go, so nothing out of the ordinary there. Currently at 150 points down. It could go to 290, so it could basically double from this point and still only be 6% down from that level. So still looking well within the pullback section, technically speaking, and then obviously in terms of the fundamentals here, looking at where the sentiment is, we're basically halfway down. Maybe we get that extra move to the downside, maybe we don't. Either way, the market can sit in this middle section and then start to recover. The NASDAQ is also sitting in a reasonably solid position, about 5% down. This can go double digits. NASDAQ is different to the S&P, but the S&P, we're just looking at single digits. Meanwhile, a lot of people are looking for this to be that significant pullback that they can all jump into because they missed out on these lows. We talked about these lows specifically looking at the volume and what happens at those bottoms as well. So that's why we're only expecting single digits here. Now, on to crypto. Crypto's fear and greed has also been declining here, going from greed, not even strong greed, but some greed, and just flattening out here, almost dead on 50. So what we've seen in the past is higher highs and higher lows, but now we've seen a lower high. So it wouldn't be out of the question to expect the market sentiment for crypto, this is the crypto fear and greed index now, we've switched over, to flush out some of these lower market sentiment prices here. It's currently sitting at 33. So I think the longer we sit here and don't move up in price, maybe a smaller move can be required to flush out that market sentiment. That's what we want to see. I would love to see that. It doesn't have to happen, but I would love to see that because then that just resets us from the moves to the upside. So I think even if we get a move down, smaller moves down, because people are kind of fearful that this market's not going anywhere, smaller moves down could potentially drop the market sentiment further, in this case, than it has done in the past. Let's wait and see. It's a possibility. Either way, it doesn't matter too much because of how this fear and greed has been holding up for the crypto market. So the market sentiment is kind of resetting at the same time, even though we're not seeing those flush outs. As you can see, the price is basic, or the market sentiment data is still at 50 over this entire period. So for BTC, what we've seen is a rejection dead on 50% on the 8th of August. That was around the PayPal news. And of course, we've just sort of flattened out again. Good news is on the very short-term scale, the market is sitting around 50%, just slightly breaking down from it. And if we take it back to the low, it's slightly sitting above. But this is way too short-term to give us a macro signal. What we've talked about in the previous video is we want to see, or bulls want to see, the price get back above 30,200 and consolidate above that level, because that is the strong part. This is the 50% tool top to the current low, and the strong section is in that top half. This is the weak section. So the longer we stay here, the more chance there is of testing the lows again. And that's what we talked about before, as we've seen the lows tested, like we saw in the last 2-month move to the downside. Tested here, bounced up, came back down, tested, and then took off again. So the 50% can be tested again. We talked about that on those days there as the market bounced. So pay particular attention over the next couple of weeks. Yes, there is more Fed and economic data coming out, PPIs, we've seen CPIs, all this sort of stuff. It doesn't really matter. I just want to sort of avoid that noise and focus on the charts and what's going on here with investors buying and selling. Speaking of which, a quick look back to them looking at buying, like I talked about on the way down. Just have a look here at the volume, and this also shows up on BTC as well. You can see how they are buying on these down bars, and that's what has to happen in these markets. Because of how strong the market is to the upside, it's very hard to buy for the big players here. It's very, very hard to buy as the market goes up without moving the price too much. So this is potentially their opportunity to get into the market and not show up on the price chart with big moves to the upside. But you can see in the price chart itself how much the price ranges overlap each other. So as the sell-offs come, like you can see here, reasonable volume compared to the last 3 days, there's the sell-off, and then the price overlaps. So there's buying going on, a lot of buying going on as the market falls. It doesn't mean that we're going to stop here. We can keep going down. You can see on the way down, there's been good volume, but the price has not fallen out of bed. We haven't seen these huge declines quite quickly. The price is overlapping a fair bit. So I'm still expecting, maybe we come back and test some of these old prices, that's fine. But keep an eye on the volume as well. And you can see the buying happening here. That's the NASDAQ. The S&P, look at that. The S&P is doing the same thing. Look at the grays here compared to the whites. They're the red days. And you're seeing big volume coming in compared to what we've seen over the last month, month and a half, okay? Same thing happens at the lows when you go into a macro scale. Look at the monthly here. Huge volume bought up at the lows. Huge volume bought up the lows. This is your March banking crisis. Remember, the world was supposed to collapse in March of 2023. Big volume here. Market takes off from that point, okay? So that's why volume is super, super important. Bitcoin, that's what we're looking at here. 28,300 could be the next level to test yet again. Keep your eyes on that. We haven't had that big move. What we've seen for the short term for the S&P and NASDAQ is that this is typically that period that the market goes a little bit choppy, a little bit sideways, and typically doesn't fall out of bed. Falling out of bed is defined by double digits here for the S&P. Single digits, absolutely okay. We need to digest such a massive move here on the way up, okay? So that might play out into BTC as well. We're not seeing huge declines either here. And so that just leads us to remembering that the market is doing everything that it needs to do at this time in the cycle, because we need to digest those moves before we start to wait on bigger moves to the upside. The macro bull still well and truly in play. This is the next key level to the downside to watch in the short term for BTC. That is at 24,750. You want a round number, call it 25,000. That is still well and truly in play, so keep an eye out on that should we get any sort of those sharp moves on the S&P or the NASDAQ. Like and subscribe, you know what to do. Links in the top of the video description to check out the trading results and also the TIA Premium. Plenty of courses to get through there if you're a little bit bored in the markets at the moment. Otherwise, I'll see you at the next video, or you can check out the videos that are popping up on your left-hand side right now to check out how we got to this place and what you can learn from the Investor Accelerator. Have a great one, guys. I'll see you back at the next video. Until then, peace out.